Hello everyone, welcome to watch the market opening bell on January 14th, Wednesday, your 10-minute guide to the stock market. The Hong Kong stock market rose first and then pulled back. The Hang Seng Index opened 350 points higher, with the morning gain expanding to 535 points to a high of 27,143 points. Later, the gain narrowed to 121 points at 26,729 points. The full day rose 239 points or 0.9%, closing at 26,848 points, marking 3 consecutive trading days of gains, cumulative rise of 699 points or 2.7%. The X-share index rose 65 points or 0.7%, closing at 9,285 points. The Hang Seng Tech Index rose 6 points or 0.1%, closing at 5,869 points. The total market turnover for the day was 315.1 billion Hong Kong dollars. The total turnover for Southbound trading was 137.3 billion, while Southbound funds had a net inflow of 1.296 billion. Among them, net buys include Alibaba at 1.071 billion, Tencent 755 million, Xiaomi 607 million, Sinok 208 million. Net sales include SMIC at 834 million, China Mobile at 803 million, Wuxi Biologics 347 million, Xtelpai 334 million, Ecosol 113 million. According to statistics, Southbound funds have net bought Xiaomi for 9 consecutive days, totaling 6.934 billion. Net bought Tencent for 5 consecutive days, totaling 6.998 billion. Net sold China Mobile for the 7th consecutive day, totaling 5.283 billion. Net sold Meituan for 4 consecutive days, totaling 1.166 billion. Technically, the Hang Seng Index broke above 27,000 points, approaching the 27,200 point target, but unfortunately failed to hold above 27,000 points. In the short term, it may first fill the upward gap from yesterday between 26,608 and 26,729 points, and after completing consolidation, challenge 27,200 points again. The 3 major Asia indexes opened slightly higher in the morning, but softened afterward, with the afternoon decline expanding and the Chinese index falling over 2% at one point. Turnover in Shanghai and Shenzhen markets continue to increase, exceeding 3 trillion yuan for 2 consecutive days to over 3.65 trillion, hitting a new high. The Shanghai Composite Index closed down 26 points or 0.6% at 4,138 points. The Shenzhen Component Index closed down 197 points or 1.4% at 14,169 points. The Chinese Index closed down 66 points or 2% at 3,321 points. The renminbi US dollar central parity rate rose 5 points on day at 7.0103 to $1. Hong Kong listed lithium battery stocks surged sharply. On the news front, the Ministry of Finance and the State Administration of Taxation jointly issued an announcement on adjustments to export tax rebate policies for photovoltaic and battery products, clarifying that starting from 2026, the export tax rebate rate for battery products will be phased down and eventually cancelled. The battery export tax rebate will be cancelled in 2027, and from April 2026, the rebate rate will drop from 9% to 6%. The policy change has strengthened market expectations of short-term demand shifting forward and increased downstream production scheduling. Although the long-term logic for new energy and energy storage demand remains unchanged in the medium to long term, under the stimulus of the news, lithium carbonate futures hit the daily limit for 2 consecutive days. The GFX lithium carbonate futures main contract broke through the 170,000 yuan per ton mark, hitting a new high since October 2023. Regarding the mainland's announcement to cancel VAT export tax rebates for photovoltaic and other products, the China Passenger Car Association stated that reducing export tax rebates for lithium batteries can help domestic export product prices return to reasonable levels, reduce the so-called subsidizing overseas consumers phenomenon, and also helps address some international concerns, easing trade frictions, which is of great significance. CPCA Secretary General Cui Dongshu believes that in early 2026, new energy passenger vehicles will be affected by adjustments to vehicle purchase tax policies, with sales declining at least 30% quarter-on-quarter seasonally. New energy commercial vehicles after the year-end rush last year will inevitably face a sharp seasonal decline this year. Regarding the EU's release of the guidance document on submitting price undertaking applications, Cui Dongshu said that in the initial stage of implementing the price undertaking mechanism, some car companies may experience short-term sales fluctuations due to adjustments in product pricing and structure. However, as car companies adapt to new rules, localize production capacity, and enhance product competitiveness, sales of Chinese electric vehicles in the EU market will gradually recover. Cui Dongshu expects that from 2026 to 2028, China's electric vehicle exports to the EU will maintain an average annual growth rate of about 20%, becoming an important engine for growth in the global electric vehicle market. The 44th JPMorgan Global Healthcare Conference officially opened in the United States, lasting 4 days. This conference is hailed as the Spring Festival Gala and a bellwether for the biopharmaceutical industry, attracting significant attention. Participating companies cover 6 core areas: biotechnology, biopharmaceuticals, medical devices, diagnostic technology, etc. Many innovative drug companies from the mainland are also actively participating, with 7 companies giving main stage presentations, including 3 CXO companies, WuXi AppTec, WuXi Biologics, and WuXi XDC, as well as 4 innovative drug companies: Beijing Zilab, Ascentage Pharma, and Legend Biotech. In addition, 17 domestic innovative drug companies such as Hengrui Medicine, Blue Star Aditio, Sino Biopharmaceutical, and Innovent Biologics will appear in the Asia Pacific session. Investors can watch for any positive news releases that could benefit stock prices. Q Technology issued a profit alert expecting the consolidated profit for the year ended December last year to increase 400% to 450% year-on-year, based on the consolidated profit of 279 million yuan in the same period of 2024. For 2025, consolidated profit will reach 1.395 billion to 1.534 billion yuan. In the first half of 2025, profit attributable to shareholders was 308 million yuan, meaning the second half profit attributable to shareholders will reach 1.087 billion to 1.226 billion yuan. The significant year-on-year increase in consolidated profit is mainly due to the group's promotion of the Q Technology Group 5-year business development strategic plan, accelerating the business development of smart vision products in non-mobile phone areas. The group continues to focus on mid to high-end camera modules and fingerprint recognition modules as its main strategy, with sales volumes of periscope camera modules, optical image stabilization camera modules, and ultrasonic fingerprint recognition modules, increasing sharply year-on-year, and the scale growth of higher-end products, effectively improving the group's product added value. Although the U.S. December inflation data was milder than expected, the deteriorating situation in Iran led U.S. President Trump to cancel all meetings with Iranian officials and promise imminent assistance to protesters. The three major U.S. stock indexes all closed lower. The fear index VIX rose 0.86 points or 5.7% to 15.98. The Dow closed down 398 points or 0.8% at 49,191 points. The S&P 500 closed down 13 points or 0.2% at 6,963 points. The Nasdaq closed down slightly by 24 points or 0.1% at 23,709 points. The Nasdaq Golden Dragon China Index, reflecting Chinese concept stocks, fell to 148 points or 1.9%, closing at 7,874 points. JPMorgan Chase reported better than expected quarterly results last quarter, but U.S. President Trump's proposal to cap credit card interest rates at 10% still affected bank stocks, with the stock falling 4.2%. Goldman Sachs also fell over 1%, while other financial stocks like MasterCard and Visa fell over 3% and 4% respectively, ranking among the worst performers. Some tech stocks rose against the market, with Intel surging 7.3%, the best performer in the Nasdaq. AMD rose 6.4% to 13.28. AMD rose 6.4%. Alphabet rose 1.1%, but Meta fell 1.7%, with its Realty Labs laying off about 10%. According to reports, Netflix plans to revise the terms of its acquisition of Warner Bros. Discovery possibly conducting the acquisition in all cash to speed up the process. Under the original agreement, Warner Bros. Shareholders would receive $23.25 in cash and Netflix common stock worth $4.5. The U.S. consumer price annual inflation rate for December 2025 remained at 2.7%, consistent with November and in line with market expectations. Month-on-month CPI rose 0.3%, meeting expectations. The core monthly inflation rate was 0.2% below the expected 0.3%. New York Fed President Williams said that as the Fed's first interest rate meeting of the year approaches, he believes interest rates are currently at a comfortable level, implying the Fed is not in a hurry to cut rates this month. Williams noted that the labor market has cooled over the past 12 months and underlying inflation momentum appears to be easing, gradually aligning with the Fed's 2% target. The Fed's current policy stance is closer to neutral, no longer actively suppressing the economy as before, meaning the Fed may not need further rate cuts in the short term. He added that U.S. monetary policy is now in a favorable position to support labor market stability and bring inflation back to the Federal Open Market Committee's 2% long-term target. The U.S. inflation data solidified market expectations for Fed rate cuts this year. At the same time, ongoing geopolitical crisis in Iran and elsewhere boosted safe haven demand, with gold prices hitting a new high, spot gold reaching over $4,634. Silver prices also hit the new high, with March silver rising 2.1% to $86.9 per ounce. Iran is an OPEC member and a major crude oil producer, and the market is concerned about potential disruptions to oil supplies, with crude oil prices surging 3%. Our stock pick today is REMEGEN, stock code 9995. REMEGEN is a fully integrated biopharmaceutical company dedicated to discovering, developing, and commercializing innovative and differentiated biologics for the treatment of autoimmune, oncology, and ophthalmic diseases, with significant unmet medical needs in China and globally. The group has established comprehensive integrated end-to-end drug development capabilities, covering all key biologics development functions, including discovery, preclinical pharmacology, process and quality development, clinical development, and GMP-compliant manufacturing. The group has a robust pipeline of over 10 candidate drugs, with 7 in clinical development stages, targeting more than 20 indications for clinical development. 2 drugs that have entered the commercialization stage, telitacicept, brand name Tai, and distamab vedotin, brand name IDC, are undergoing clinical trials on more than 20 indications in China and the United States. In June 2025, the group entered into a license agreement with Vor Biopharma Inc. to develop and commercialize telitacicept globally outside of Greater China. Under the license agreement, Vor Bio shall pay the group and its wholly owned subsidiary, Yantai Rongpu, a total consideration of $125 million, including a $45 million upfront payment received in July 2025, and the issuance by Vor Bio to Yantai Rongpu of warrants valued at $80 million. Based on clinical development progress and post-launch sales, Vor Bio shall pay the group milestone payments for several potential indications totaling up to $4.105 billion, as well as royalties reaching high single-digit to double-digit percentages of actual annual net sales. In January of this year, the group signed an exclusive license agreement with AbbVie Group for RC148. RC148 is a novel bispecific antibody drug targeting PD-1 VEGF developed by the group. Under the agreement, AbbVie will obtain exclusive rights to develop, manufacture, and commercialize RC148 in regions outside Greater China, while the group will receive a $650 million upfront payment and be eligible for up to $4.95 billion in development, regulatory, and commercialization milestone payments, as well as tiered double-digit royalties on net sales in regions outside Greater China. Suggested buy price $96, target $106, stop loss $91. I do not hold the above stock.